Hey, so the market has taken a dip this weekend, and if anything, these dips, if you're new, first of all, these dips really show our weaknesses in the market. Do we have too much money in the market? Were we too blindsided by kind of the bullish targets of all these coins? And in this video, I kind of want to go through my process on how I kind of put my theories to the test and how I move on from mistakes. Now, I could say quite easily from the previous videos that I did call this big dip in the market. I actually called the price that it went down to. It's not an I told you so or anything like that. It's what the charts told us made sense. That said, I almost didn't follow my own predictions because I didn't quite believe emotionally that it would happen. So this video is going to be about how we can move forward from this dip, knowing that more dips are coming, and how we can kind of better protect ourselves and actually take advantage of these dips better. Let's get into it. Bitcoin has taken, along with the whole market, a massive dip. The dip that took place for Bitcoin was actually starting from the beginning of the weekend. So let's say that's Saturday. It actually took a 21% dump in the market. Now, we're looking at Bitcoin, and as you can see kind of in the longer term charts here, this is a daily chart zoomed out. We can see the 2017 bull market here. You can see a lot of these red candles, like each one of these candles represents one day. Let's have a look at this one, for example. This one right here, in one day, Bitcoin came down 30%. We can see these big candles with big wicks coming out all the time. And what I wanted to do was go back and research what these big wicks mean and how does the market usually respond after one of these big wicks. So the first thing we need to understand is where these wicks happen, because they happen, and they happen a lot more than you would think. Look, whenever we rise up, there's a big wick. Rise up, big wick. Rise up, big wick. Why did we think after this rise up there wouldn't be a big wick? That's something that I've written down as part of my notes, and I urge you to as well. Always expect a dip. And when a dip comes, where should we expect it to go to? Those are kind of the questions we need to ask ourselves, because we will take advantage of movements in the market like this, and we'll be rejoicing instead of kind of in fear of what's happening. If we look at the fear and greed index, it's at 18 right now. We've just been spiraling down this week. Like last week was 27, yesterday we had come down to 25, and today we're in extreme fear, which means people are panicking, seriously panicking. Let's have a look on the last 3 months. We're an all-time low in terms of sentiment. People feel at an all-time low right now, emotionally. And we're getting to the point where, we're at an all-time low, just like after that massive crash we had back in May. We're there. We're like right there. So you can see the sentiment of the market. We've only gone down to 55 on the CBBI. This is a new addition. This is the Bitcoin price has just changed the color. The rainbow line displays the Bitcoin price using the CBBI score for each color point. So this has actually been adjusted. The Bitcoin price is all the way up here at 53.49 today, I guess. I don't know. I don't even know what the Bitcoin price is. Yeah, 49. And the CBBI is all the way down at 55. So we're expecting the top of the market to come in when the confidence is in the 90s. But look, the highest we've been in confidence is 76 this cycle. So everyone's feeling down, everyone's feeling anxious and everything. And in the knowledge that we have these dips in the market, how can we start to predict that in the future? What I did was, with XRP, this looks like a complete mess, but with XRP, I actually logged all of the big wick candles that occur in the market, and I noticed something very interesting. Look where they happen. They happen in the lead up or on the way up, or in this little capitulation phase before a big move. Look, they all happen here. Look how many we've had on this lead up here on this bull market. This is from it's basically September 2020 till now. There's been loads of these movements. Look, 47% drop, 33% drop, 53% drop, 20%, 40%, 33%. And the one we've just had this weekend was only a 24% drop. Interesting, right? So these are things that happen. Yes, it felt a bit rough to go through it, and especially when sentiment was feeling so high that we're about to bounce off this trend line and go crazy and head up here to the top of the Fibonacci extensions. But human nature isn't like that, because after all, these charts are recording human behavior. Every time someone clicks buy or sell, it's driven by emotions. So this is emotional behavior that we're just trying to read the trends of, and people react the same way all the time. That's why people say history repeats itself, because humans don't change. When the price gets up here, about this time period in kind of increase, everyone starts feeling like, okay, this is the top. This is an emotional state up here. Being up in the 90s on this CBBI confidence score is when people around the world typically emotionally feel like this is too much now. So that's why the price comes down. Not because a coin is overpriced now, not because too many people are over believing in projects. It's because people at this point think when price action moves like this, people start to think, okay, I think it's too much now. And when enough people think that, the price plummets down. That's what these charts are actually recording. So when you see these massive moves, they're as a result of people's bullishness or over bullishness. So if we see here back on the 14th of December 2019, there was a period of time where we went from, it was a period of 61 days. So 2 months went by and the price basically just went up for 2 months. So we can see that when the price goes up for 2 months, that's a sign for people where people start thinking, okay, maybe this is a bit too good to be true. And lo and behold, the price plummets. So let's see if that theory proves right again. So if we go up for 2 months, starting from here, for example, June the 27th, 40 days, we could actually probably even extend that. Let's do here, for example, on July the 5th, 58 days went by. This is interesting. 58 days went by and then the market plummeted. So there could be something within that, 2 months of bullishness. What does that mean? What happens to the price after 2 months of bullishness? And that is when people feel things are going a bit too well here. Should we put this to the test again? Look, let's do a date range. Let's say the price has gone up from here. Let's go to 2 months and see what happens. 57 days, 2 months. Look what happened to the price. I love all this stuff. It's so interesting. This is like a research thing for me. So we go here. Let's go 2 months, 60 days. Correction. So let's have a look at this just to solidify this thought. 2 months go by. After the 2 months, what happens? 50% drop. Okay. 2 months go by where the price has gone up and it's stayed there. What's the price when it comes down? Let's have a look. So that was actually here. 27% decrease. So we can see when the price is up for 2 months, that seems to be a little indicator that something's about to happen. So let's have a look at this one as well. So from here, well, we could actually say from here, 2 months go by. Oh, look at that. Look at that. 2 months go by and we get a tidy little drop of 27%. There's something in that 2 months thing. And so that's a theory that what you can do is you create one of those theories and you just backdate it and test it way back and way back and way back. And you can actually start to predict, okay, every 50 to 60 days, we're going to have something major happen in the market. That could be a simple hypothesis that things are going to happen. So let's test it for recent things, recent price action. So 20th of July, 2021, this is recent. Let's put 2 months on the bar here. Look at that, 60 days to the day. And right here, we had a correction in the market. We should have seen it coming, 2 months. We had 18% drop in basically 2 days. Okay, let's do this again. Let's say, okay, from here it went up basically. So let's go to 60 days. Would you actually look at that? I need to zoom in because this is, I might have just discovered something on on the video here that actually really makes sense. So the 60 days ends there, and we are thinking, okay, 60 days have gone by. We're still kind of at a higher point than where we were before, so there has been upwards price movement. 60 days has gone by, and we then get a little push up to the top, and then we get this dip that we've just experienced today, this weekend, sorry. That's gone down 24% or something. There's something to this 60-day rule that I'm kind of discovering as I make this video, but these are little theories that we should start making so that we can always predict that there's something coming, you know? So when the price does do these major dips, where does it dip to? How we can do that is we can go over to the left here and get this horizontal ray. I'm going to actually star it so I can use it more often. Here's the horizontal ray. Let's change it to black so we can see it. So let's look. I'm using this wick as an example. Let's go down to where the wick is, right? So we'll click that and we can see the wick went down to here. So what we can do is we can back test this to see what other points of interest fell on this line as well. So we can see that here in the what's it called? In the retracement pump before the drop, before kind of the big run up, seemed to be a support zone. We can also see that there was a resistance zone for this earlier in November 2020. So obviously these parts played a role, these moments in time played a role in predicting to us where we could potentially put a buy order to buy the bottom of that wick, which is extremely difficult to do. So let's have a look again at a different example, just so we can kind of test that theory out. Okay, so we had let's use this for example. There was a big dip in the market here. Let's see if it's validated or invalidated. So the wick went down to here, and what can we see? Okay, there was support on this zone where the price came up and bounced off this same level. There's no none of these things are coincidence, right? Things happen in the market. Levels are made in the market because human behavior at a certain point emotionally is predictable, right? So we can also see that this area at the bottom of the wick was the same area way back here as well that acted as support. So we can see that when a price action keeps bouncing off a certain area, we could have drawn this line before. We could have drawn the line probably about here to support here and support here. So even at this time, on July the 17th, 2020, we could have predicted this dip on the 29th of December 2020. So we can see these areas of support, right? It's bouncing off this area, basically. We could put a line here and say, okay, I think one day the price could return back down to this level. It's really interesting. So we could have done that for this as well. We could have seen this peak up, we could have drawn the line and looked across this line and seen, okay, it's bounced off this area as well. I would assume that at some point it will return to this area. This is what you use. You use these supports and resistances that can be drawn on a line where there's multiple hits on that line. You can bet your bottom dollar that the price is going there again. And of course, it's hard to predict these things when everyone's feeling so, oh, we're about to go, we're about to see the top of the market. No one really is thinking, we could return back to these levels here that have been clearly displayed as resistances and are probably going to be turned into supports. These are things that happen all the time, right? We see it as we go back. You look at these big wick moments. And I mean, it's the same here. Look, let's draw another line. So where I'm focusing it is over here, this double bottom, this W pattern that happened at the bottom. We could have basically predicted the prices would come back down there. We draw that line so that we match it up with the double bottom here. So where else on this chart did we see that this was going to be an area of resistance or support? Well, right back here on the 30th of November 2017, we saw it. Look, the price on 3 occasions, actually way more than 3. So look, price came up, used it as a support right here. When it dropped through, it came back, touched it once, twice, 3 times a lady. So it comes up once, twice, 3 times, 4 times, 5 times. Then it pumps up out of it. So in this area of time here, this period of time, everyone would have been thinking, the price is never going back down there. This is great. I can't believe it. It's never going back down. But lo and behold, 6 months later, look what happened. It came back down to that area twice. We had 2 opportunities to buy again. And that ended up actually being buying almost the bottom of the market there. Let's have a look at another one that I've just spotted. So I'm focusing over here in March the 12th, 2020, where there's this big wick down. You see that? So let's draw a line across that big wick. Where else have we seen a big wick reach that line? We've already seen this happen. So when these wicks happen, they mean we're going to be revisiting these areas again. It never happens just once. You never get a wick down just once. This is what we need to understand here. Look, even this wick here on the 16th of September 2017, draw a line on it. It didn't come back here once. It was already there before. It was an area of resistance here. You can see when the price was skyrocketing, it's an area that it played around. The charts literally gave us sight of what was going to happen here. It happened here, and then it gave us another opportunity because it wicked down here. We know it's going to revisit. We've seen it wick down here, so we know it's going to revisit that area. It's come all the way up. It's literally extended up from that point, from this wick here. It's extended up 2,000% about, and it's come back down to revisit these targets. Look, you can see it had issues around this price because of this wick. It wicked down here twice, 3 times, maybe 4 times. We know it's coming back to these prices. And this big wick came down here. We know it's revisiting these prices. So when we see these big dips in the market, just know we are coming back to that area. We're coming back to these zones because they are very important zones for the market. Now, as we look ahead at XRP going up from here, hopefully, going all the way up to, I'm going to say $13, and then we decrease the usual, 95% for XRP, we can see that, let's say at the $13, we can see that a 95% drop right around this area where we'll be revisiting this wick. So this wick has happened. We've seen it's had resistance and support already. We know we're coming back down to this price. It's inevitable that we're coming back down to this price. So what you could do is, once the price has made its action, you could set yourself in there, you take some profits on the way up, set yourself a buy order at the bottom of this wick at the 69-cent level. We're coming back. We're coming back there. I'd also estimate to say that we're probably coming back down to these wicks. Look, there's a wick here that happened. This has been a wick that has touched arguably maybe once or twice here. Let's go back in time actually. Let's actually test this, and let's put the line on it. So I'm looking at the wick that I was looking at was right here. Let's go back in time. We can see it was resistance here, it was resistance here, resistance here. And look at that. It was actually the peak of the alt cycle in 2017. None of these numbers are a coincidence. This is just the way humans behave. We come back down to these levels, and I would say, it could be a really good plan to, on every one of these black levels here, you can see the numbers on the right, is to set buy orders at all of those, just a little bit of money every time. So when we do get one of those wicks down, where we revisit wicks that have already happened, you're buying the bottom of the markets. So all I want to urge is for everyone to be looking at these dips as inevitable. And when they come around, when we've had 2 months of bullishness, start looking at these lines. Where did the last wick come to? Because we could be revisiting. Where did the last W pattern happen to where we can buy the bottom of these Ws? Let's do it again for this one. So here, I was saying buy at the bottom of these W patterns, which is what I've drawn the line here for. You can see there was resistance here, there was resistance here, there was action here, there was resistance 2 times here, there was support here. All these moments recreate themselves as we move forward in history. So yes, we could come up, but if we do come down, we're probably going to revisit these numbers. I would say though, if we did revisit these numbers or went lower than that 51 cent level, I think that's probably the end for XRP of the market. And we saw XRPs run up back in April where it didn't even reach all-time highs. So let's just understand that these dips happen, and when they happen, just make sure you're ready with these buy orders. It could be, I mean, if your whole portfolio is worth like $500, I don't know, $20. Just put $20 on these little lines. You're just picking up these coins at prices that professionals find hard to time. But we're making these rules and theories that allow us to know that price is going to come back to these levels. And it's going to bounce off these levels. It could wick down to these levels. So just have little buy orders in at these levels, and you can't really lose. But again, I'm not a professional. I'm not a financial advisor or anything. So these are just patterns that some guy on the internet is just putting together here, and it just makes sense. So anyway, right, that's all for this one. If you want to join the elite group of 27 subscribers, it's growing. Oh my goodness! Then please do. I'm actually going to be doing price projections and chart analysis of any coins that you mention in the comments. I do those throughout the week, and every Friday I'll do a market update just to let you know what's going on, what I'm seeing. And if there's emergency ones like this, then, but please join the channel, and it would be great to see you. Have a look at all of my other videos. Here's a video that the algorithm thinks you should watch based on what you like. So go and have a look. Thanks.